consumer discretionary, that sector's up 3%. That's largely because of Amazon's up 6% today. Communication services is up 2%. The likes of Comcast, Facebook, both up a healthy 3% or around there. Real estate and technology complete the sectors up more than 1%. At the bottom is financials. KBW Banks Index down another 2.3%, down 6% now for the week so far. At the close, Sarah, the S&P is up 1%, the Dow up 0.5%, the Nasdaq up 1.7%.
And that's the first positive day for the S&P in 5. Welcome back, everyone. If you are just joining us, to Closing Bell, I'm Sarah Eisen here with Wilfred Frost and Mike Santoli, CNBC Senior Markets Commentator. Take a look at how we finished up the day on Wall Street. Up. We finished higher, well off session lows. We were down more than 150 points, as you can see earlier in the session. We closed up 139 points there on the Dow. Once again, it was technology that really led us there. Nike, the best performer in the Dow, ahead of earnings, which should just come in about 15 minutes. S&P 500 up 1%. Strength in tech, consumer discretionary, communication services, real estate, though, and industrials, staples and materials all ended the day higher. Financials, the worst performer. The Nasdaq up 1.7%, by far the outperformer. And the biggest point contributor was Amazon, which had a very strong day today. But you also saw strength in Microsoft and a lot of those social media names, as Julia outlined. The Russell 2000 index of small caps up 0.8%, also with a positive day. Investors are now turning their attention to a trio of big earnings this hour. Nike, KB Home, and Stitch Fix. They're all set to report in just a few minutes. We will break down the numbers as soon as they hit the wires. Plus, we will ask the CEO of Levi's what will happen to the retail industry if another stimulus bill isn't passed in Congress and a second coronavirus wave hits the United States. First, though, let's talk about the market today. Jim LeCamp from Morgan Stanley is still with us. Robert Nobles from Synovus joins the conversation. Though first, to you, Mike Santoli, amid a lot of the conversation and worry around a second wave and some closures in Europe and just what it might mean for the U.S., stay-at-home stocks did well, but we also saw a pretty nice rally across the board.
Yeah, I mean, the market's kind of reacting to itself in a lot of ways in this last few weeks. And I think what you saw is that NASDAQ 100 went down 14% from a high, S&P down 10% from a high. Seemed like kind of enough for now. We're now bouncing. Today, the S&P picked up not quite what was lost yesterday. So try to keep it all in context. We're still just kind of bouncing off the recent lows. It seemed like you got just a little bit oversold on some measures, and it seems like there's room for a little bit of a rebound before you even have to have these sort of make or break moments and regaining, any kind of an uptrend. So this is that kind of in-between period where it's tough to feel like you have an edge in terms of which way the next 2 or 3% goes, but it seems like it's still part of that process of getting through slowly, perhaps, a correction period. And yes, you have to grant the weak seasonal patterns and all the rest of it. But, so far the market has roughly held together because there hasn't been a lot of macro pieces falling by the wayside.
Robert, do you think this is the start of a significant bounce, or is it hard to see major progress for the market before the election?
Wilfred, thank you for having me on. We think this will, for the next couple of months, we're probably range bound. There are a lot of decisions being held up by the election. And, the volatility has recently increased because of uncertainty over events that have come into focus, like the presidential election, the recovery path for the economy, and also the selection of a Supreme Court justice. We just think you just need to be patient and allow things to play out. This is something that happens on a regular basis whenever we have a major election. As you look at it, there are probably low expectations for the debate performance for Vice President Biden, but there continue to be high expectations for the recovery in the economy. And investors who probably going to misjudge one or both of those events when they happen next week are likely to lose some confidence and probably will see the continued volatility that we have in the market. Clearly there, the market is anticipating a delayed election outcome, and is somewhat starting to believe there could be a delayed economic recovery. But we've turned our attention past the election now, and we think there are only going to be limited major legislation passed, regardless of who wins, because of the division in Washington. And, we know that more stimulus will probably come after the election, and it's needed.
So we identified this 3278 quarterly OP to be important level to watch this week. You can see on the 30-minute chart we spent most of the day dancing around this quarterly OP line, and this was, you can see we had multiple reactions of this this market fulcrum. The market was just playing around this level for much of the trading day until around 2 p.m. where we have this break of this triangle which started the move higher and finding a bit of resistance against this 240-minute F3. We have COP over here, step forward COP here. We have a little bit of reaction of this step forward COP, and I'm actually looking to see if we could continue the move towards this OP area.